A completely new tax system is coming for sole traders and landlords in just a few months' time. Most people are not prepared, but if you miss the deadlines, then you could end up with penalties. I'm Kiran, I'm a qualified chartered accountant and experienced tax advisor. In this video, I'll explain what the changes are, whether you're going to fall into the new tax system, and even how you can avoid the system if you want to. According to HMRC's independent body, almost half of businesses did not know that these new rules were coming into place. The rules are called Making Tax Digital for Income Tax Self-Assessment. So I can only assume that it's a similar story for landlords. So I'm going to get straight into what the changes are. So currently, if you are a sole trader or a landlord, you will be used to submitting one self-assessment tax return to HMRC each tax year. That deadline, if you submit online, which most people do, is the 31st of January. If you submit a paper return, then it's slightly earlier. What will now happen under these new Making Tax Digital rules is that sole traders and landlords will be expected to make 5 submissions to HMRC over the course of a tax year. So that will include 4 tax updates, 1 update each quarter, and then a final declaration at the end of the tax year, which is similar to the self-assessment that you're already used to doing. HMRC claim that this is going to make things easier for individuals because they can spread their workload out over the course of the year. But actually, this is going to be a huge burden for businesses and landlords because it's a massive behavioural shift from submitting once a year to having to remember 5 different deadlines and making sure that you hit those deadlines so that you don't incur points and then potentially incur penalties. You also have to make sure that you are recording your income and expenses digitally, and you have to get software that's compatible with HMRC's Making Tax Digital system. So HMRC have got a list of compatible software on their website, and you have to make sure that you choose one of those providers in order to be able to submit to HMRC. So what is the real reason for HMRC introducing these rules? Because I think we could all agree that it's not going to make things easier for individuals who are busy running their businesses or managing their rental properties. Well, HMRC have actually said that they expect to generate an additional £780 million of tax revenues from Making Tax Digital for Income Tax Self-Assessment. So that's the real reason. The reason is that they need to plug a massive tax gap, and this is one way that they think they'll be able to do it. If you're enjoying this video so far, then please hit the subscribe button because it will help the channel to grow and I can continue producing tax content. Let's talk about when you'll be caught by these new rules. If, as a sole trader or a landlord or both combined, you made over £50,000 of gross income in the 24-25 tax year, which is the last tax year, then you have to follow these new Making Tax Digital rules from April 2026. That's gross income, it's not profit. So for example, if you have a business that you're operating as a sole trader and you made £26,000 of income in that business last year, and then you have a couple of rental properties and you made 26k of rental income from those properties, then you've exceeded the £50,000 and you would have to start following these rules from April and make those 5 submissions to HMRC over the course of the tax year. Even if you're not making quite that much, you're still going to be caught by the rules, because HMRC have said that if in the current tax year, which is the 25 to 26 tax year, you're making gross income of £30,000, then these rules will apply to you from April 2027. And if you make gross income of £20,000 in the next tax year, then you're going to have to follow these rules from April 2028. So I think most people are eventually going to be caught by these rules, unfortunately. And that is a problem because research has found that 1/3 of people who will be caught by these rules don't have an accountant. So they're going to be navigating these rules on their own, and they might not really be aware of the deadlines and the fact that they have to have digitalized records and the right software in place. So if you know anyone who's in that position, then please share this video with them, make them aware of the changes, and that they need to start getting their records digitalized now. And just one thing I want to explain, those 4 quarterly updates that you need to make, they are not going to calculate your tax liability. That is purely reporting to HMRC what your income and expenses are for that quarter. At the end of the year, when you do your final declaration, that's when your tax liability is calculated and your tax payment date doesn't change. In terms of what you need to do next, if you've got an accountant, they should be on top of all of this. They should be able to take your data and put it into their compatible software and make those submissions on your behalf. But it's definitely worth having a chat with them to see what they need from you and also how they're going to go about the process. For example, are they just going to make a simple submission for you each quarter, or are they planning to do a tax adjustment for you each quarter, in which case they might charge you more money? So have a chat with your accountant and see what they're doing. If you don't have an accountant, then you need to make sure that your records are digital starting now, so that that first submission, which will be August next year for the July quarter end, is more straightforward. You also need to make sure that you've got software that's compatible with the system, and HMRC have a list online of compatible software that you can choose from. I'll leave a link in the description box for all the different software types that you can choose from. There are groups of people who do not have to comply with the Making Tax Digital rules, but they are quite niche groups and most people are not going to fall into one of those groups. So for example, one group of people who don't need to follow these rules are those without a national insurance number. There's a complete list on the government website, so have a look at that. Again, I can leave a link in the description box for you to check. At the start of the video, I told you how you can avoid these rules. So if you're keen to not go into this administrative headache, which it will be for a lot of people, then you could consider incorporating a limited company, because companies are subject to corporation tax rules, not income tax rules. Companies have to submit a corporation tax return every year, and then from there you can pay yourself a salary and a dividend. That could be more tax efficient for you. It just depends on the profile of your business and the amount of money that you want to extract. But do talk to an accountant about that if you are keen to avoid making tax digital. Thanks so much for watching. I hope this video was helpful. Subscribe if you haven't already, and I'll see you next time. Bye.